It's Brian Preston, the money guy.
All right, this next question, this is one that I've actually gotten a lot this year specifically. Actually, I got it more last year, but I've had some follow-ups. Rob said, I thought it said Rob Gronkowski. It does not say Gronkowski. That'd been awesome.
Well, I hear that he saves all of his endorsement money and just lives off his salary. Awesome. So he would definitely be a money guy, family type guy.
But this is not him. Okay. But your name is awful close. It says, with the rates at 0%, should I prioritize paying off $27,000 in student loans or focus on savings and investing in my IRAs? So he's at a place where his interest rates are, and he's saying, you know what, if I'm not losing money to interest, should I tackle just knocking out that student loan debt, or would I be better served to build the army of dollar bills elsewhere?
I get nervous about answering this question because 2021, based off of what happened in 2020, is such a unique time. But I do want to share with you what a unique thing is. So if you're watching this post-September 2021, check back on some of our other content, because I don't know how this will age, but for the next 5 to 6 months, we have a unique thing going on, guys. They have told us that the government's essentially they're not even deferring interest. They're just not charging interest on a lot of these student loans until after we get through September, as part of the CARES relief and so forth. And then there's been a lot of throwing around in Washington that there might even be some forgiveness. And I would feel just horrible if I tell you, yeah, go knock that debt out. And then, they write off $10,000. I've even heard as high as $50,000. So it's just a weird time. And this is what I get nervous about politics, policy, is because, man, you can only plan for as good as what's going on with current legislation and what the current laws are. And right now we have a lot of question marks. I've had this problem with health insurance for years. I mean, for years you have all these policy debates. It's hard to tell early retirees or fire people, how do you navigate health insurance when there's so much policy debate and things are just so uncertain? We kind of have that going on right now with student loans. So I would tell you my advice now in this unique time at the end of March of 2021, all the way through to September, you kind of just need to keep focusing good behavior of building resources, but I don't know that I'm throwing them into my student loan right now.
Yeah, I'm gonna agree with you, but I'm gonna say it a little bit differently. Because look, I like math. Math is just kind of my thing, right? Well, based on present day, we kind of have some student loan rule of thumbs, right? Given what we know the historical risk premium to be. And that's just a way of saying, what can my army of dollar bills do versus what am I paying in my student loan interest? And it's pretty simple mathematics right now. Our rule of thumb.
I know where you're going now.
Our rule of thumb is that if you're in your 20s and your student loan interest is 6% or below, I don't know that I'd be in a huge hurry to go pay that off.
And what's the rate between now and September right now, Bo?
Zero. Zero.
It's a pretty easy hurdle to clear.
6%. And so if you're in your 30s, we say, okay, if your student loan interest is below 5%, I don't know that I'd be in a huge hurry to pay it off. And then in your 40s, if it's below 4%, I don't know that I'd be in a huge hurry to pay it off, because odds are the return on your army of dollar bills is going to be so much stronger than what you're paying on your student loan interest. And in a time when you're paying zero on your student loan interest, the mathematics are just, it's easy, in my opinion, to think about it that way. So that's how I would approach it. Based on your age, do I think that the money that I can deploy elsewhere will have a greater rate of return than 0%? And that's kind of the way that I would approach making that decision.
By the way, that fits in nicely to the financial order of operations, because look, number 3 is high interest debt. 0 is definitely, because I know we have a picture of a house on step 9, which is the low interest debt. Student loan interest at 0% is definitely low interest debt, so plan accordingly.